Hey folks, and welcome to the Pipnotic Symposium for the 28th of October 2019. Beautiful day here in Bali, a very hot day actually. We've had some pretty high temperatures these past few days, maybe a week or so. So we're just busy staying in the shade, which is always a challenge. But today we're going to have a look at some pairs, and we're going to cover some areas of supply and demand in various markets. And we're going to use a theory that I walked through in the last video when doing so. Okay, so just follow along as good as you can. And if you have any questions about what it is that I'm talking about, just try and go back to the video that I did yesterday, rather on Friday of last week, and have a look at that, because the material that we're using as a basis for our analysis is presented in the video that I did on Friday of last week. So just have a look at that. Okay, so this is the euro American dollar, and notice how price is moving down. It's moving off these highs here. Why is it moving off of these highs here? We spoke about this last week, a video from I think the 24th, maybe earlier, where price was up here, around here, or just moving away from this area here, and we discussed this area, and we had a couple of guys talking about this area, and we agreed that this area was not a fresh area. Why? Because price had already returned back to this price level here, and so this is the one that we're referring to for trading. And the reason this is interesting for us is because if we zoom out just a little bit and we focus on historically respected areas that have been consumed and are no longer valid, if you notice, we had a lot of tests down in this area here. So if we take an average of the lows at this area here, we probably have something that looks like this. Okay, so we mark this off, and then you ask yourself the question: what area of supply removed this area of demand? You can't see it on the 4-hour chart. This is because it's a micro area, so it's a smaller time frame. Okay, but price tested, we had a few tests, and then price sat on the area like this, and then it left. What's that telling us? Well, that's telling us that this is an important level. Why? Because it was strong enough to consume this level, which is also important because it was tested historically several times before it finally broke. So the area that we looked to trade at was here. So we sold here, and we had 2 times the size, and this is the trade that we discussed last week. Okay, and so this is essentially what we have to look for. And so you have the concept of pancakes that we talked about in Friday's video, where you have a plate of pancakes in this area, and price continues to poke into this little area of demand, and we use the metaphor like a plate of pancakes. So if someone's eating pancakes and they've moved their fork into the plate, their fork is going to hit the pancake at the very top of the stack, and once that one's gone, then the fork is going to have to move a little bit lower to get to the pancake, to get to the next one. Okay, so the fork is always moving lower to find new pancakes, and the same applies for trading, where you have price that is moving price lower in an attempt to attract buyers. Okay, so you have as price is moving higher, a lot of people who are maybe not that wise in how the market works are buying because price is going up. Well, if price is going up, then we should be buying. And this is kind of counterintuitive, because if you consider the price of a telephone, would you rather pay, let's say, $1,000 for a telephone, or would you rather pay $100 for a telephone? Well, personally, I'd prefer to pay $100 for the telephone, and the reason being is because that's a discount price for the telephone. $1,000 sounds like a pretty retail price for a telephone. So as prices are moving higher, people who are keen on buying here and here and here and here, as price continues to move higher, it's not a terribly good idea. And so it's kind of like waiting until the price of whatever it is you need to buy is at its highest price before you buy it, and not waiting until it's on discount or on sale to purchase it. So as price is moving higher, most people are buying along the way. But people who have maybe a little bit of an insight as to what's going on, well, these guys, they're going to start selling. So they start selling here, here, and here, and here, and here. Why? Because focusing on historical price, these new high prices are really good prices to sell at. They're terrible prices to buy at, but they're very good prices to sell at. So when you have a price movement like this, prices moving down, is it a good idea to sell? No, it's not. It's when price moves away like that, then it's a really good time to start to look to buy. And looking at this chart, let's say none of this existed here. When price is moving down, you have no idea where historically cheap prices were. Okay, so you have to look back at historical price in order to establish this. Okay, so you need to look at old prices to find out where prices were bought at discount prices historically. Okay, and you can't do that by focusing on one time frame like this unless it contains a ton of information, which most charts don't. And so you're required to do what we refer to as like a top-down analysis, where you look at the bigger time frames, or you zoom out a little bit so you can look at historical price levels and find out where price turned historically. So if we look at this one here, let's just mark this off. We'll mark off the low because we want to know, why price turned around there. If we zoom out a little bit, we can't see on there. Let's go to the daily chart. Can we see here? Yeah, here we can see that. Where is it? It's there. Here we can see that we had another one of those patterns where we had these two white candles just here, and these are interesting to us. And these are interesting to us because this price window was respected once, twice, and 3 times. And so price was looking very attractive at this price level. Okay, so if price came into this little window, people were looking to sell. Okay, and then notice that, let me change the color of the pencil to, let's say, yellow. So when price came up here, we managed to move through it. Can you see price went through it, but then we moved back below the area? What does that mean? Well, that means that we have, when price managed to move away and trade away and not return, we know that this is the area, this is the price area that was cheap enough to attract a whole lot of buyers. And so when price came to this price level, it left. Okay, you can see that it was respected once, twice, 3 times, 4 times, because price did not hold above this area here. But when price came down here and finally left, that you know that you have to keep an eye on this in the future, because this area is responsible for moving this area. So this one is gone now. The area that did it is this one right here. This one right here. Okay, so you have to keep an eye on that in the future. Okay, and if we know what it looks like, we just mark that area off. Let's zoom in a little bit. So let's mark off the pin bars as well, because those are pretty interesting. So the area would look like that, and we would make it 2 times the size, just so we have a protection for our stop. Move this line, and then we go forward, and we have a look. And this is, oh, looks like there's a lot of, there we are. That looks a little bit weird, doesn't it? Let's go back here and remove, this one. This one's gone. The one that is left is this one. Okay, so this is the one that's left. Price came to it and we left. Why did price leave here? Because we just saw back here, it exhibited strength. How do you know that? Because it consumed the supply, an area of supply that was tested, that was strong enough to hold 1, 2, 3, 4 tests. Wait, 1, 2, 3? Yeah, 4 tests. And on the 5th test, it popped out. And so this is the area that we want to reference to buy in the future. Okay? Okay, good. So this is an interesting area. Price had a bounce. This is another interesting area. Price had a bounce. Interesting for the reasons we discussed. Okay, so this one is now gone. The area that was in play is this one here, which is tested. What do you do now? Well, looking at this, you have to find again areas of supply and demand that were respected historically. And how do you do that? Well, you have to find those areas that were tested many times. Okay, you have to find areas of supply that were strong enough to stop price from moving through it numerous times, and then you want to see that area consumed or violated by an area of, in this case, demand. And this is the area that you will target for your entry. Okay, so let's see if we can find one here. I mean, looking at this, when I look at this, I get a headache because I think, oh, it's really ugly. It's not very clear at all. And so when I see this, I think, oh, there's not a lot of clarity. When I don't see clarity, I can do one of two things. I can change time frames or I can change instruments. But if we want to stay on this and have a look at that, let's say that we have fundamental insight, and I want to, let's say, for example, buy the euro, American dollar. So I just need to find out where I need to buy. And so I'll go to a different time frame and I'll try and look for those areas that were tested and then violated. And if we look here, we're on the daily chart now. Notice that we had some wicks here. We had a wick here, a wick here, and then price moved through this area. So if we draw off this area, first of all, let's do our analysis properly. And so what we'll do is, before we do anything else, is we're going to look at these candles here that left. Okay, then you ask yourself the question, was the body of this candle within the range of the previous? Sorry, before I even do that, look for the green candle, rather the candle that left, like a strong move away from an area. Okay, then go to the previous candle. Are you an accumulation candle? An accumulation candle is a candle formation that we have the open of the period here, we have the close of the period here. Okay, so price moves into the open of this period. Let's say it's the daily chart, and it moves up and it moves down and moves up and it moves down. So it just does this, then it leaves. So it just means that the price moves sideways for this period. It did not move outside of the range of a previous candle. Okay, so we have one here, we have one here, and we have one here. But this one, the body of this candle is not within the range of the previous, and this body is not within the range of this one, and this one is not within the range of the previous. What does that mean? Well, that means that we have micro continuation patterns. Okay, so in such a situation, you can either go to the smaller time frames, or you can mark off the highest accumulation candle, like so, from the high of the wick to the low of the lowest body, be it the open or the close of the candle. Mark off two levels. Actually, before we do that, and then you have to do another thing, which is identify the beginning of the buy and the sell zone. Okay, and so here, because it's supply, we're looking for the beginning of the sell zone, and the sell zone is simply an attempt to challenge an area. And you can see that we had an attempt to challenge this area here. Let's do this, and then we had another one there, and so the entry would be here. So our area of supply would go from looking like this to looking like this. Okay, so it looks like this now. So remove this one, that's gone, and this is where we would expect price to test. Price tested, but notice here that now this area is no longer valid because it's gone. But notice also that price went through it, and now we're trading below the area. What does that mean? Well, that means that we did not have enough buying in this continuation pattern in order to entirely consume this area. It's completely gone, but a whole lot of selling entered the market above this area here. So people, as soon as price went above this area here, we started to move up into what? Into these areas here, and finally this area here. Because what area is this here? Well, we had a lot of wicks here that were tested, and now price moved through this area. What does that mean? That means that we have supply here. So what do? We do the same thing over again. So this candle left. What's the high of the candle? The high of the candle is here. So initially you would mark off your area like this, like so. Okay, price came to that. The beginning of the sell zone is the high of the candle that left the area. The body of this candle is in the range of the previous, and they're all linked together, these ones. These are really big accumulation candles, as you can see here. Okay, but this is the area of supply. Okay, and so when you see when you identify an area like so, you have to focus on these attempts to move into them after price leaves. And if you notice on this one here, once price left, it tried to come up to this area and then it left. What does that mean? Well, if from this candle and forward, if none of this price data exists, this is the beginning of the sell zone. Okay, so you can expect price to move at least up to these highs before moving lower. This one moved actually through the level. What does that mean? Well, that means that the sell zone begins here now. So we move it from the high of this candle to the high of this candle. Why? Because the pancake at this level has been eaten. So the fork had to go to the next area to grab the pancake, and now that one's gone. What does that mean? That means that we can expect price to go at least as high as this one here. And notice from the edge of this area of supply until the high zone here, we have like a little window. And within this window, since price left, these candles that are related due to the bodies of the preceding candles being within the range of the previous, price has not been back. Price has not been back to them. So this is fresh supply. Okay, and going on a smaller time frame, like we did, enabled us to see the details inside these candles. And we could see here that we had a lot of testing of the area. So we had support at this price level and then consumption of that support, or the demand that was causing a support for price. Price left, and this is where price went back to historically here, and you can see price poked into it and went down. And so now you have to find the area. Is this one gone? No, it's not. It's still in play. It's still there. So we have 4-hour supply that is driving price. Okay, so now in order to find these micro areas, well, then you have to find these other areas that were consumed. And if you notice, we have this one here. This is not a super pretty one because we have a lot of kind of trading in the area. Also notice we had this area of established. This is not supply. Why? It's a reaction to supply. This is not supply. This is a reaction to supply. So you have to be able to differentiate between supply and demand and reactions to them. And this I will refer to as a parent and a child. Okay, this is a parent and this is a child. Okay, sorry, this is a parent. This is also a parent, and this is established as a result of the presence of this. Okay, because price went up here, we went to the edge of the sell zone. We found selling pressure. We moved away from this area here. Okay, but we can expect price to move up to this area, but we have this sell zone to contend with here. Price contended, changed it. Price contended it and changed it. And so now we have the beginning of the sell zone is now here at the edge of the daily area that we marked off with our other tool. Okay, so that's what we're looking at now. And notice the price is wriggling down. We don't really have anything pretty in here, as I mentioned. But what we do have, let's remove this. We have, so you have to find these areas that are responsible for accomplishing something. So we had here we had testing at this area here, like this. Okay, price went up, we poked through, we wriggled at the area, and then we moved back down. Where? To the beginning of the sell zone. Sorry, the buy zone. This is supply that's been consumed by buyers. The beginning of the buy zone is the lowest test of the area of demand that caused the consumption of this. Okay, so price came up, now we went down to the edge, and now we're moving beyond. And notice here we have something here. This is micro. Okay, first of all, before I do anything, we have micro something in here. Test. This price went down to it, cut through it. So this one caused it to be removed. Tested, tested, tested. We have no luck in removing this area until this one. So you go to the low of the candle here, or you go to the candle that left, and you look at the accumulation at that area. Okay, then you would end up looking at something like that. Okay, so that's what you have there. Price came roughly to this area. We reacted at this resistance, became support. So price ended up not coming to the demand, but reacting at this level of support. So resistance becomes support, and then managed to move away from there. But notice that we have testings here, we have test here, and also these levels here. So we have something in here. This is on a micro level. I can't see it on this time frame. So price tested, you can see quite a bit. And now we have this one that managed to cut through it. Okay, the candle that left, where is it? Let's look. The candle that left is this one. This one managed to close and trade above it. And when price left here, it did not come back. This is the first time back. Okay, so on a smaller time frame, you're going to see, before we do that, on the small time frame, we need to mark off the low of the low. Okay, go on to the 1 hour chart. And you can see here, price tried to get through, didn't succeed. We tried again, didn't succeed. We tried again and we succeeded. Okay, and so if we look carefully here, let's zoom in. You know, I'm just going to remove the supply and demand stuff so we can only see the ones that I draw, so we have clarity. So this one is now gone. This is a candle that left, but notice that the body of this candle is not within the range of the previous. So this is gone now, okay? Where is the low of this candle? It's just here, right there, or just at the the bottom of this area of supply that price went through. Okay, so that one is now gone, and this is a slingshot, and I refer to this as a slingshot because you have price moving up like that, going up to an area, and then the slingshot is pulled back and then it shoots up. See, we have price moving up to an area, moving sideways. The slingshot is moved back here before we leave. And the reason this is a slingshot here and not this one is because this candle's body is not within the range of the previous the previous candle, from this high to this low. So this candle closed above it. What does that mean? Well, that just means that it's exhibiting strength. Okay, so this is exhibiting strength and showing us that when price managed to return down to this level at this point in time, market time, it was strong enough to hold, and we ended up painting another candle that went above and beyond this area of supply that we can see just here. So this is the area that's now interesting to us. Okay, so if we go over here and have a look, this is really, really close to where price came to here. And I'm in Asia, and so not a lot is happening in Asia. Price came really close to this area here, and we're just kind of drifting sideways from there. Okay, and if you go down to a smaller time frame, I bet you can find another beginning of a buy zone, and another one, and another one, and another one. And the smaller time frame, the more precision you will have, and you will be able to pinpoint your entries to the point where you'll simply shake your head in amazement. But it requires that you understand the overall reason for why price is moving. Okay, let's remove these and all the other ones. I just deleted more objects list. Let's kill them all. Super. So okay, let's have a look at the American dollar, Japanese yen, just have something fresh to look at. What's going on here? Well, notice that we had a couple of things. We had a big test and then price went higher. Nice. We had we had this, which is nice. Price poked into it. It went down. Did it manage to move away? It didn't. It actually had to retreat and go back. Why? Because we got into a buying territory here. We popped up, and now we are, before we do that, this one managed to go through it. What's the edge of the area that did it? Well, it's this one just here. So you can see the beginning of the sell zone is here, and it kind of goes up to here like that. Okay, this is where the slingshot was pulled back to. The slingshot that was required to remove this area here. Notice also that we have a bounce of this area here, which is interesting. So we had bounce. What area is it bouncing at? This one here. So we had test. This is the area that removed it. This is where price came to, and now we're leaving. And some of you guys may be asking, well, can we trade these areas once? only, or can we trade them multiple times? Well, let me ask you this question. What happened last time price came to this price window? Did it have a gradual wriggle away from the area, or did it just move away very forcefully? Well, I think it moved very forcefully. You can see price poked into this area. We had a tiny poke into it. We had a lot of weeks, and then price left very quickly. Okay, and so looking at this area, price left. This is the beginning of the sell zone. Until price violates it, this remains to be the beginning of the sell zone. This one didn't reach it. This one didn't reach it. This one reached it. What does that mean? That means it's moved higher. This one had to go further higher above this area, and actually poked into this area of supply before it left. So now the beginning of the sell zone is the high of the deepest retracement into this area of supply. And so at 109.35, I think that we can expect some kind of reaction. And so mark this area off on your chart and have a look. What I advise you to do as well is to mark this off and then go to the smaller time frame and do the same analysis over, so that you're able to find these little areas that are responsible for moving away. And notice, if we have a look here, we have a white candle. The body of this candle is in the range of the previous. So all of these four candles are linked together. Which candle is not linked together? It's this one, the green one. And so you could say, well, I'm going to start to sell at the highest high of this area here. Okay, so you mark that one off there. And also, where's the deepest retracement back to this area at the departure? Let me go to the hourly chart because we'll see it clearer. You can see it just here. It's right here. Right there. Okay, so we have an area here, like so, which is interesting. And notice we have a level here and a level here. What does that mean? Well, that means that we have a parent, we have a child. What does that mean? This is established independently from any other area. This one is established as a result of this one. Okay, so we have this area here. This one was fallen, price came up to it, and then we left. But due to the fact that price left this very quickly, I would be keen to looking at the slingshot. So here's a slingshot that was pulled back to this level and then it left. Okay, so this would be an interesting area to sell at for me. Keep in mind as well that we had this area here that was tested once, twice. The slingshot that cut through it is up here. So let's mark that one off from here to here. Okay, this is where it happened. I'm just going to remove the daily area because it's not a daily area, it's actually a 1 hour area. Okay, so this is what we're looking at there. So we have this one here, which is interesting. This candle, the body of this is in the range of the previous, as is the case of all of these. This is the only one that sticks out. So we have an hourly sell zone here. Let me remove this. Okay, this is an hourly sell zone. This is hourly supply. This is the hourly sell zone. This is hourly supply. So if we have a look at these, I mean, look what happened last time price came to the first one, went into the sell zone, just poked into the supply, and then it left really, really forcefully. Okay, how are we doing now? Where are we now? Well, we're still pretty far away from that. If we go to the daily chart, so we can see we had that test and we left. And so now we want to go at least to the high of this this test before we can expect price to move away. But I'm thinking we'll probably have a bit of a bounce at that area once again. And then ultimately we have this area at the top, which I like. We've identified the beginning of the sell zone on as low as the hourly chart. And so I'm thinking that we'll have some bounces there. So mark these areas off on your charts and watch them and see what happens once price does it. Okay, good. Well, I'd like you to do this on a handful of pairs. So pick maybe 3 to 5 pairs and go through them one by one, starting on the daily chart and then going down to the hourly chart. So do your first analysis on the daily chart, mark off your daily supply and demand, and your buy and sell zones, and then go down to the 4-hour, do the same within the daily areas, and then do the same on the hourly chart within the 4-hour areas. Okay, and then I want you to mark them off, and I want you to watch as price enters those areas and see how it reacts to these different areas, and try to do this on a few pairs. Well, I'll leave it at that. If you have any questions, please send them in, and I'll be thrilled to get back to you. Thanks very much for watching.